Okay. So let me go ahead and share my screen. And I think we're going to take a look at GA tonight. Let's take a look at that one, see what's going on. Okay, guys. So let me see how many people we have on tonight so far. We're gonna jump right into this. We have Laura, Melissa, and Pip Killer. So any one of you guys can mute yourselves, or I'll mute all of you guys. And if anybody has any questions, just let me know. Any questions? Okay. Well, what I'll do is I'll go ahead and just go with a strategy. It's being recorded, and we'll take a look at the market, and then we'll go from there. We're only gonna be on for about a half an hour, and then I'm gonna go ahead and go about my business. All right, guys. So what I like to do is take a look at the higher time frame first and get my trend bias or trend direction. As you guys can see, right now we're on the hour. Let's go ahead up to the 4 hour and see what we can see. So far, we can see that the market has hit the highest high so far from the last day, about day and a half. That's a full day here, and this is just getting started in the trading day. So it is 9 o'clock now, so we already had. Also, sorry guys, it's the H4 chart. This is the week here. If it was on the hour chart, that'd be a different story. This was last week's high, and we're still looking to still drop lower than this last low. And guys, we can get a break beneath this last low. So let's draw a trend line. It's still showing that it's still an uptrend. If we get a break of this trend line, guys, it's gonna be a wrap. Okay. And you notice that's the quarter. That's a quarter point there, 1.8500, a major hold, and it might come like that, and then go ahead and continue to drop on down. And I'm banking on the drop into here, guys. I'm talking about over the next 2 or 3 weeks. Now, so far, what we do see from our analysis is the market has been making lower highs now. So high, low. We have a lower high here on the white circle or the white pivot point. So as we look from this point here, we'll see that we have the market thinking about breaking, but we haven't had it yet. So anyone have any questions yet as far as the strategy before I go into the strategy?
No.
Okay, cool. Turn my volume up. Or somebody say something. Yo, God, somebody say something again. I think I had my thing on mute. Somebody say something.
You hear me?
All right, there we go. All right, cool. All right, so nobody had questions, right?
No.
All right, cool. So here we go. Let's go through the strategy. Hold on, please. Okay. So we'll talk a little bit about what I used to talk about is war zone trading. We'll get a little bit more into this on Sunday. But tonight, we're going to talk about war zone from trading signal, what I call to signal. Semi-4 here, semi-4. When a war is taking place, you're getting, this is a breakout or reversal, right? So you get the reversal here. Once you get this painted, you gotta wait, guys. You have to let this thing come back. Confirmation, 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 breakout. It breaks from the zone. What you guys can see was already painted for us on that one indicator. This is a zone here, this green bar. That green bar is a smaller zone. This is another zone, and this red bar is another zone. That's a weak zone. You can see it say weak over on the side. So once it breaks out of this area here, you know that the market wants to come back up. So you can take the buy here after this last pullback. And while we do that, we always look in our strategies, which is written out if you guys don't have it. When we get the stochastic crossing with the RSI, leaving the station, which is here. When we get a semaphore, we got a magic dot, and we got the fractals down. And guys, you see that you got? Can you let me zoom in a little bit? Maybe you guys can't see that. You can see here where we have this we call it LRMA, but we're going to call it the money line. As you guys see it turning from red to green, which is hard to see because of the green the green square, but it turned green about right here. Okay. And it continued on here. It came back and turned yellow and then red again for the pullback. But once you get this confirmation here with this dot and this, guys, it's kind of like a home run here. You take this buy and you put a stop loss beneath this last low. That's a big stop loss there, but or you can stick with this low. It's about 50 pips. But don't forget we're on the H4 chart. So if I back on down, you guys will get a tighter stop loss. But if you're going to trade from signal to signal on this time frame, you won't have to put you won't have to deal with risk management as far as still only 1% of your account. So if you see that your entry will be 100 pips stop loss almost, you gotta put your lot size accordingly. But don't forget, look at that, 200 pip take profit would have been up here, but you guys could have received. So that's a good risk to reward ratio either way you look at it. So again, the strategy, market is exhausted. It's sold all the way from here. High, low, lower high, lower low, lower high, lower low, lower high, lower low. Then the market reverses. You get a low, a high, right? A higher low, a higher high, higher low, and then a higher high. As we move over, you'll still see it continuing up. High, low, right? Higher highs, higher lows, higher highs. Boom, it reverses again. So guys, the way you get to trigger your movements are the cross of the stochastic under the 50 if it's a buy. So when you have this stochastic here, I mean this semaphore here, you're always looking for the stochastic cross underneath the 50, which this is the 50 line. If you guys can see this here, that's a 50. That will be your 30 and 20. That will be your 70 and 80. That's the train station. That's the train station. That's the 50. We might have to call it 50 something else. You guys can know what I'm saying about the 50. But for right now, that's the midway point. I guess we could call that the maybe the stop off of the train station. We'll figure something out for y'all. But pretty much, when you get this cross of the stochastic here, after you get this reversal, then you get the retest of the reversal, which is in this area. All this is retesting. You can take that buy. But if you really seriously want to be like really safe, see how the stochastic crossed again under the 50 here? You can take the buy right here. Boom. Take that buy. You good for literally 200 pips. Stop loss would have been down here for about 40, 50 pips, but you would never really got hit. And keep moving along. The next low cross was here. Could have took a buy. You had a little drawdown, but you guys see what you guys can see that you had about 500 pips. Next cross would have been here, guys, underneath the 50. This is the 50. The cross under here. You go ahead and take that. Then you get the pivot too. See the blue, see the smaller semaphore? That's a pivot. Okay, pivot high, pivot low. Right. So you guys want to look for like a pattern that kind of looks like this. Always, if you're selling, you want to see something like this. You want the market to come down, always come back up. That's the retest. If the market make like a double top there, which will look something like this. That's your entry. Sell it. Looking for a buy. Market comes up, right? This might be a semi for here, but you can't take the buy yet. You gotta wait for it to come back down, right? Then the same thing we just did on the other side. No, it's just a double bottom, or a triple bottom, or an inverted head and shoulder, or another candlestick pattern that we just taught on Sunday. I hope you guys will go back and review and check out and practice with and learn. The market shoots up. This will be your entry point here. This will be your entry point right here for a sell. So the market initially took a dip down, but you couldn't take its reversal yet because guess what? Now you got the pullback. You want to enter right here, and guess what? It's the same thing here. This is the example for this one, and this one. The market started here, the semi-4. This will be considered a semi-4. The market went up. Now, it's not going to look as perfect as these lines here, but it started here. It played around. It came back for the pullback. This would have been a pullback right there. That's one pullback. The second pullback was here, which would have been another pullback somewhere between here. And guess what happened? It went up. But here was a third pullback. And guess what happened? The stochastic cross where? Under the 50. Again over here. Under the 50 across. Again across under the 50 here. And then you just wait for that. Remember we talked about the neckline, which would be here for us. That'll be like considered a neckline. And this here will be considered the neckline. Remember we talked about zones. This will be level 1. You guys can see how you already got the zone right there. Went sideways and broke out. Level 2, sideways, then finally broke out again, but we always buy. We're not taking no sells. Then level 3, and went sideways once again, then broke out one more time for literally probably about almost 100, 200 pips, 200 pips. And then, guys, you catch the reversal. Okay, now, since the market finally decided to turn around, guess what? You had to wait a minute. This dropped down heavy. You missed out on this money. But guess what? When you got the pullback, wasn't really safely to here. Even though it don't look like that's a lot of money, and you could have been patient, you could have took a sell here. Still would have caught about 60, 70 pips in about probably a couple of days. All right, and then same thing for this week starting off. This was a brand new week. Now this would have been a couple of days ago, or probably Sunday night. Let's see, 1, 2, 3, 4. This would have been yesterday. You guys could have sold this yesterday from here, which would have been at. Gotta move this thing out the way so I can see when this would have been. This would have been 1 o'clock in the morning. Start of Asia. So at 5 a.m. Guys could have sold this from 5 a.m. to about 1 o'clock p.m. today. Could have about 60, 70 pips. That's good money. That's a safe trade. Okay, that's why I kind of encourage you guys to stay on the higher time frames. So now, if I drop into the hour, you guys will get a better understanding of why I say that. So imagine these last 2 days. Now we knew we were sellers, right? From looking over the 4-hour chart, and we dropped down to the hour. This one we could catch a nice entry. So you'd have seen the semi-4 pop up here, right? Let me get this out the way again. Hold on, guys. Get the semi-4 to pop up here. You already had the crossover here of the stochastic. Like, you know, the market's ready to turn around soon. RSI is completely overbought. It's playing around up here in the train station. It came up, it rejected, came up, it rejected again, and it went up to as high as it could go. You get another cross before the market even drops. RSI leaves the station about right here. I'm gonna put a line here, guys. I'm gonna put a line right there on that because I want you to see something. So RSI left the station right there, right? Actually left us and put over a little bit to the right. Right Let's leave it there. It's fine because I don't want to do that forward. We're gonna drop down to the 15-minute chart. I want to show you guys something in a minute when you would catch an even better entry. I don't want you guys to go under 15. I want you to practice on an hour for at least 30 days. But if you're feeling a little froggy, you can jump down into the 15. But just be careful. This market moves quickly, and the slower the time frame you go, the market moves so fast it can kind of throw you off, and you can get what they call get faked out, or you can hear what they call noise in the market. These wicks, it's called noise in the marketplace. All these long wicks here, the market rejected. It was trying to buy, then it came back like it was gonna sell, close, buy. Then you could see the market slowing down. So it's like you had your foot on the gas, and then next thing you know, you start seeing wicks. I mean, the gas. Somebody start putting the gas on, want to slow the market down. Then it pull back and it shoot up again. So guys, if you see this cross above, remember we say when you see a semaphore at the top, looking for crosses above the 50. When you get a semaphore below, which was here, looking for crosses beneath the 50, which would have been a good buy here, a good buy here, better buy here, really good buy here, serious. Well, no, we got to change that because now buy has changed. But you guys understand what I'm saying here. And you'll get way more triggered entries on the 15-minute once we drop down to show you guys that. So again, and also too, don't forget about the Bollinger Band. That's giving you price exhaustion as well as expansion. The market really does two things: expand and contract. It gets tight and then it widens out. So right now the market is bouncing off of these Bollinger Bands, and it came out here and it came outside the band. You see these green bars coming outside. See this white band here? If you guys can follow that, where the Bollinger Band is, that's the inside of the band. That's the 50 period moving. That's the lower of the Bollinger Band. And as the price comes from this side to the other side of the band, you'll notice how it breaks to 50, but sometimes it doesn't break to 50 yet, but it made the double bottom. First leg, second leg W, finally breaks to 50. You guys can see how it will create the neckline here. And the market breaks above to touch the other side of the Bollinger Band, which is here, to drop. And you guys see it drop because what happens? The RSI is the white line. It's the smart money, I call it. And this green and red cross is a stochastic, which I call sentiment or fear and greed or emotions in the marketplace. So once you get that cross there, you see where everybody's thinking about heading, but you see the smart money leave out. So once the smart money leaves, you guys can say, hey, cool, we had the market drop here, and I can take a sell. But somebody might be really super patient because here is an aggressive entry. If you take a sell here, that's very aggressive. This move here or around here will be what they call a confirmed entry, because this is confirmed. Like you had the market come here at the close, you could take a sell here. That's literally 30 pips. Shoot, that's beautiful. You can't beat that. But if somebody really wanted to be patient and said, you know what, I'm going to wait and be super patient, you could have waited for this cross here above the 50, and this would have been, see that magic dot? And not only that magic dot, you could have also looked at this fractal beneath this yellow brick road, which is the yellow dotted lines, and you already see that you have the money line is red. You could definitely take that for a sell. You probably sold it somewhere about here after this cross here, and this would have sold anywhere. I mean, hardly no drawdown, literally none, eight pips. And you guys see where the market went about 70 pips. You could have taken your profit there. Hold on, guys, give me a second. So, you kind of can see you could take your profit from that point right there. And we're going to drop on down to the 15-minute chart where you guys can look at the higher time frame analysis from the hour. Now, don't forget, we had this line already painted at the reversal point at this zone. So when we drop down to the 15, you guys are going to see something pretty interesting. And it could blow your mind. We don't know. We'll see. If you guys remember that line we placed, if you notice it on the 15-minute chart, you kind of had a quicker entry for a sell. Even though you wouldn't have got it for a sell here on the 15, you would have waited here. but this would have been a tighter entry. But do you guys notice again? What do we have? Market moving up. You get the fractal, semaphore. We get the magic dot. The money line turns green, yellow to red. That thing comes up. It breaks above the Bollinger Band. It comes back in between the Bollinger Band. From this range to this range, guys, that's about 30 pips. I mean, I'm talking about that's solid money right there. Okay? And the cool part of it is if you look down below, the market already had its cross, had a second cross. RSI played around in this overbought state, and it has to come back and retrace. The geopoliticals of the market makes it so the market cannot just go in one direction. If it does, then that's kind of like interesting. But normally, for far as world events and our financial markets, the market cannot just continue to go in one direction. Has to make a retracement. Money, things have to be brought, things have to be sold. So among that situation where you get a buy or sell, even if you got a up or a downtrend, this smaller time frame, what we call fractals or move within a move, this could be showing an uptrend on the 15, but be a downtrend on the hour or the 4 hour, but you capture that smaller move. So on the 15, you get a quick hit, a quick 20, 30 pips is beautiful on the 15-minute chart. Plus you're on GA, which is kind of a very volatile pair. The volatility means it pumps a lot of money in the market at a quick rate. So guys, that's kind of cool. What you guys can see. I'm getting all these Facebook posts now. That's my masseuse. I get a massage a couple times a week. I have a masseuse come to my house. Forgive me for that popping up, guys. She said she needed confirmation. I confirm that in a little bit. But let's look here. That's the drop. And guess what? This was showing you the enter. Guess what? You can actually, once it starts to cross down here. So that could be an enter for you. And then the exit will be here. But when would you get back in for another sell? Look at that. Look at that cross above here. Take the sell. Look at that. Another like 20 pips. Right there. Right. That move. Another cross above the 50. Another cross above the 50. Because guys, imagine you sitting there like, oh man, I got the drawdown. Hey, that's part of the market, but guess what? You got 150 pips of drawdown to go to get another 30. I think that's pretty safe. But if you could just be super patient and wait for the cross to happen at the overbought area again, which is here and here, you'd have got in here and you would have had no drawdown. Let that candle close. You got the magic dot and a fractal. You underneath the 50 part of the Bollinger Band, and you ride along the yellow brick road, which is the yellow dotted line, and you have a red money line. That's all good confirmations or confluences. A confluence is having 4 to 6 different ideas telling you, hey, it's still a good buy or it's still a good sell. I'm going to look at about 20 to 24. I gave you guys about 10 to 12 in the strategy, so you guys need to go ahead and start looking through that and reading that. But again, this is an opportunity for you guys, for me to go through it. Hope you guys have some questions tonight that I can answer. But you see from there, you want about 60 pips, okay? And then it does this pullback. And you guys might be tempted to take this buy. Maybe, maybe not. One of my good friends out there, you guys might know, Crystal might take this buy just because it's there before she reads the market. And that's my buddy right there, but I know sometimes she has a hard time looking at this. So hopefully she looks at this video and kind of get an idea of what I'm trying to show you guys here. You could take this for a buy, but this is the trend buy, right? So next, you will remember your market really is a downtrend. Let's zoom this one out. We're really downtrending here. Let's draw a trend line so you guys can see what I'm talking about. Then we'll zoom back in. Here to here to here. This is how you go, guys. I mean, look at this. We can sell this, guys. You can take a sell right now. This is a perfect sell. If you guys take a sell, let's go ahead and take a sell right while we're in the market. That's the sell right there. And I put my stop loss above here. Like we talked about, if it gets stopped out, hey, cool. We'll put our stop loss above the last high, which is there. Let's take a 20 pip to 30 pip take profit. Let's go to the next quarter point. Right there. How many pips would that be? About 16 pips. Yeah, we should be good. Let's take it on down here. Yeah, we're looking at 30 pips. That's nice. That's a good risk reward ratio. The risk will be 27 pips. Reward would be 30 pips. So we got close to a 1-to-1. So I see what happened. And if you guys want to take that, you can. It's GA sell. We'll look at the hour chart, see what it's looking like too. I mean, guys, you can't make this stuff up. I mean, all you gotta do is be patient, take your time. I mean, look at this, still a downtrend. They go to two touches. And if you do what they call an inner trend line, we can take it from this point here and touch all these, and look what you got: a lower high. You got a low. You got a lower high, then you got the last lower high, which we just took an entry on. So, guys, be honest with you, we could probably take this thing, we could take this buy, the sell at least all the way down to here. I actually got to put this on a couple other trades, guys. Hey, let me go and take that. I got to get on my phone real fast. Give me a second. Almost done, guys. I got to put this on another account. And then we get back to the market. It's almost 9:30, so I'm gonna have some questions for you guys. Let's see if you guys want to ask any questions in a minute. Then after that, we'll wrap it up. Well, you guys have any questions? I mean, we can ask questions now. Anyone?
Yes. Hi, Mike. This is Laura.
How you doing, Laura?
Good. How are you?
I'm awesome.
Oh, pretty good. I know this is kind of not to do with this, but I was just curious if this is going to be like tax-free. Let's say you build the account. I'm just making numbers up.
Sure.
A profit of $5,000. You made $5,000.
Right.
Comes up and you have to take out $2,000 to, I don't know, whatever reason it is.
Mm-hmm.
Does that become income and then you get taxed on it? So how?
So the cool part about that, and we're not really into that yet, and that's another portion.
Right,
of this.
right.
But I'll answer that for you. And I normally don't answer too much of those questions because I'm not a tax professional, but I got to put fingers up. This is a live video. But what I'll say is, if you want to, once you start trading, that's why we do corporate trading accounts, and you trade not as an individual, but as a corporation. If you did do it as an individual, you could go ahead and grab a trust, but that's you got to get a lawyer and get a lot of people involved legally to get that on. But if you just trade as a company, once we get, because we're going to let you guys know about Virtual Nation, which is how we help people get their businesses started. I already have about 8 students right now that already have their businesses fully loaded. We already help them get their business website, get their business address, start growing their business instead of their FICO score, their business paydex score. That's a whole other portion. That's why I told you guys the membership doesn't just come with just, you guys learning about trading. Once I get you guys funded, I want to offer you guys how to grow your trading business. If you guys see this starting to look to go in profit, it's going to play around for a minute, but you guys can get an idea. But yeah, other than that, yeah, what you would do if you made the 5,000 and you took $2,000 out, you're going to get a profit and loss statement from your broker, and that's going to be against your name. If you have a trading account in your name, Laura, it's going to show that Laura made $2,000 this year. Now, what happens is you can try to get some write-offs, but they're going to look at you as trading as a hobby, and they're going to charge you capital gains tax on that, which would be probably. I think about 35 to 40% or maybe more. I'm not sure. You have to check with your accountant. I don't know what state you're in. But the cool part is once you start your business, you really want to go ahead and have your business trade as a company. And once you trade as a company, you can't beat it because you guys see this pullback. Don't ever get scared of pull. I'm going to show y'all something real quick. Ever get scared of pullbacks? See how this pulling back right now? I should take another sell. So I should have did. Then look how it's jumping back down. It just does that. Just to get people, it got to do the volume, but you're safe because you drew your trend line, right? Boom, 1 touch, 2, it'd have been 3, it'd have been 4. The stochastic didn't cross us, so we might get some pullback. It could come back up to here, which is the other, that's why I put my stop loss here, but this is the other quarter point, but I don't think it's going to come past this 50 line here. We could move us up a little higher to the other quarter point just to be safe. Yeah. And that'll give us a 1-to-1 still because we did 30 and 30 pips. So, and I think I'm going to just take profit down a little bit to about right here. The target. And guys, you know, you're not going to win every trade. If you could be a 50 to 60% trader, but if you keep your risk to reward ratio at a good range, I normally go for about 20 pips to about 50 to 60 pips. That's like a 3 to 1, 4 to 1. And you know, if you take a loss, that's okay because you're always looking to get those 20 to 30 pips or 40 to 50 pips. And I don't mean that in one entry. I normally do about a double entry. They call it stacking or a pyramid or a twin trade. You know, we'll get on that a little later. But you guys see if I take another quick sell, I'll be up probably about 20 pips right now. Okay. And that'd have been cool, but you know I didn't take it real quick. But you guys see how this kind of works, and as your market goes, it's going to break back down to this level here. It might come to here and come back up to this point here, which is the what is this? The 85, 86,000, and then it's probably going to break past that. And we got to just watch it and see. Yep. And yeah, that's probably about it. So, Laura, did I answer that question as much as possible, as good as I could answer it?
Yeah, that was great. I was just curious on how that stuff worked.
And don't forget, I'm offering everyone a 30-minute one-on-one. So I'm working on getting that up and running on the website because we are going to offer one-on-one services as we continue to grow. And once I get you guys funded, my goal is to get you guys funded. We have about 40 people right now on the team. And so I'm gonna see who's going to step up and really take this serious and really get funded. Even if I got 5 to 10 people funded, I'll work y'all and get y'all money up, and then we're gonna go ahead and we get y'all businesses going. And then trust me, this is about to get marketed around the world. I'm gonna need people to help me teach. So you guys are the first partakers of this right now. So this strategy is not hard. It's not really simple, but it's not hard. And if you practice it for like I say 30 days, have people on here right now, or they might not be on the call, but that's on our group. I show them how to trade in 2 days, and they catching 10 pips a day. Just being very, very patient. Like I was a little preemptive in this trade. I could have waited for this cross, right? But I'm an aggressive trader. And I'm cool. I'll get in aggressive and I'll get out aggressive. And that's okay. But some people will be more conservative. Some people will wait for more for a confirmed entry. Then we drop down to the 5-minute, which I don't. Well, we're on the hour, so let's look at the 15. We drop to the 15. You know, it looks even better on the 15. We done had a lot of candles right here, a lot of exhaustion, right? We finally had this paint because this used to probably be right here. Then it was probably here. Then the semi-4 finally came here. And if this closes in this 933, if this candle closes with this so this could be seen as a spinning top, or I mean this is a shooting star. This will be seen as a shooting star of the close, and that's price is rejected, right? So we're looking for this. Came here, it looked like it was going to keep buying the fake people out. So I said, I wish we just heard, but took another sell because that would have been a quick 10 pips, y'all. Right there, we'd have took that quick sell while it was going up. But we know for a fact that once you had this last buy as a buy, that's a quick buy. But if you look at the Bollinger Band, the market is outside the band. We're on our trend line. Remember, I drew this trend line on the hour chart. There's this white line coming across. I should have changed the colors. But these 2 lines coming down is a trend line touching, and the market is starting to make structure here. When we talked about structure, which will be reversals or a double top. So look what we have here, guys. We had, oh man, that thing I didn't draw that good. Oh man, get over there. And it just comes with time and patience, y'all. Time and patience. So look at that. Came there. Market came back up for the retest. And we're waiting to see if it's going to do its thing. And come on down here, y'all. That's what we're looking for. This will be considered a neckline, or this will be a zone. Right now, when I say zone, I mean the market just came here, and it's kind of right there. We're going to have 2 things happen. That could do what we just drew out, or it could come up here. and touch that and go to the top, and I'll draw it, and then we're gonna get out of here in a minute, because this could go like this. Hit that, and then shoot on up. Now I know, Laura, I know you came over with Corey. I know you know a little bit about the market maker method, and one thing I want to show you about that's pretty cool with this strategy is the high and the low of the day. So say you was trading yesterday. Let's get this stuff off of this. Let's do a new chart. I don't feel like trying to erase all that. Yeah, I know I could. Let me see if I could. Like this. Used to be able to hold backspace and delete, and they all delete. See, it ain't doing it. Let's make another chart. Let's look at GU. I'm gonna clean this up real quick, y'all, so y'all can see this a little better. Take this indicator off. Go to the hour chart. Click in. 3 clicks out. Move over. Let's do one more click in. All right, so we got 1, 2, 3 days. Let's take 1, 2, 3, 4 days. So market maker method consists of high and low of the day. So this Asia starts here, right? And the market, when we closed, it was going into a buyer's bias still, or you would think it was a buy, but it's kind of pulling back. The high of the day would have been here, right? So you still trying to figure out what the low is. So you thought this was the high, but what happened was the market came up, and this was still a seller's market. So you waited for this high portion here to break, and you would have took the sell. But here's the low of the day. You always get a high, a low, then the market goes back and goes sideways for the accumulate or consolidation phase. So the next day, market opened up around in this level, and you could draw out. You know what would be cool, y'all? Let me show y'all this. And this not our template. This is something I do for people I train one-on-one, but I'm gonna show it to y'all real quick. And I have something. Let's take this off. But you guys see these session boxes here? How you kind of have a green like burgundy, and then like a blue. You can kind of see like burgundy, purple, and blue. I mean, and this is called session boxes, where you kind of look at the session, and like, so example, this is Asia. This is the crossover from Asia to London. This is the crossover from London to New York. Right here, this is all New York until the market closes. Then the market opens up again, then it turns into Asia. So right now we're in Asia on GU, and we could quite possibly looking for a nice buy. We don't know yet. We got to kind of hold up and see what this wants to do. And I kind of got some different indicators in here that's kind of cool, that shows volume and volume and what's the word I'm looking for? Sentiment down here at the bottom. But I had to explain this another time. But you know, this is another template I use for other people. That I do one-on-ones with. So if you guys again was looking for the market maker method, or I know a lot of you guys are with Corey that does that. Look at this box here. Low, high today, close sideways. Low, high today, low today, sideways. Low, highest point, continue to drop. Why? Because the market has probably been in the downtrend. Let's zoom all the way out and get a bigger picture. This is called a macro view. When you look at it on a wide view like this, this is called a micro view when you zoom all the way in. That's looking at it close. That's looking at this is a macro. So you guys, again, remember how we just drew that trend line? So you guys could have kind of been like, all right, let's look to the left. Boom, boom, boom. That market's trending down. That's the hour chart. And you're going into the 15-minute chart, and you know what else you can look at too? You can draw like a channel. So price is what you can call the caged in pricing. This is a different way of looking at the market, guys. I'm just having fun just showing you some different things that you can kind of put in your mind. People have different ways of looking at the market. It's something different for you guys to look at. It's called a descending horizontal channel. So this is a descending trend, what they call a trend line channel. So we're going to go down to the 15-minute chart, let you guys see how cool this is once we get closer. You guys see that? You could have drew that upper trend line and been following this thing for the past 3 days and knew for a fact that every time you had an upper cross, because it's still the same. This is not a stochastic, but it's the same principle. Higher cross, you would have sold there. Higher cross, you would have sold there. And again, guys, look, you can't make it up. Look at the yellow brick road. I use Hikinashi candles on this template, meaning it's going by price action. So if the price is shooting down, it doesn't really show candlesticks. It shows Hikinashi, just showing with like pressure in the candle, meaning that the market wants to sell. Then you'll get a quick pullback, which will turn white to go back into a sell, to go white back into a red sell, white again back into a red sell. Now we're going sideways, and I'm really thinking that the market wants to go back up, reverse for a buy. But we got to be patient to see. It might drop a little farther down. It might not. It might shoot up. This is where it comes the patient game. And plus, this is GU, which is not an Asia pair, which makes its move during 1 o'clock in the morning, or pre-London, 1 a.m. to 2, then opens up to 3. It'll make a move all through London through New York until about 2 to 3 p.m. And you want to kind of leave this pair alone. So, that's kind of how that moves. But, guys, it's 9:42. I got a little excited. Been doing a little teaching a little longer than I wanted to tonight. But any more questions before I wrap this up?
Yeah, what was the name of that last indicator you just used?
Which one?
The session break joint?
Session break. It's called session break. Yep.
That's what it is? All right, cool.
Yep. Let me go back. But this not y'all template here. I don't want y'all to try to figure this out because it'll get you confused. I just wanted to show y'all something with the sessions because that's very, very important. Oh, you know what, bro? That's Corey.
Yeah, that's me. Cause I got something that I'm looking at that will go in perfect with the ADR that I'm working with.
Look, I don't have a session break, but I know you was asking me about doing trading view. I was just marking stuff up early on this, John. Let's get another pair up here. Let's do GBP. Let's do CAD. Let's see what we get. Now, guys, if you can see what I have here, what's going to pop up here is it's called CSA 5-stack. Remember, I told you guys I do volume price analysis and currency strength analysis. So CSA is a movement of currency strength analysis. So this is an indicator that's on TradingView. You guys can go ahead and search for it. And now we're recording, so you'll get to come back here later and see this. So, Corey, you get a chance to see this portion here. And I know you TradingView more, so, and you always can come here and mark up, but you always enter on MT4 unless you got Ninja Trader or they got other terminals you can use. But for the into the market. But you guys can see how I got like a double shaded Bollinger Band here, kind of light, darker than light, kind of like I said, dark than light. But you got your middle blue band here, same premise. But you guys can see how cool this is with the with the currency strength. That orange right there is Great Britain pound, and that red is a Canadian dollar. If you guys notice how when this did like a cross, and moving averages crossing the cross, death crosses. So see this death cross here? Look at this. Once it did the cross, you got a fractal. Is at the band. You get what you call here a you get a reversal candle. Boom. Look at that. Next is red. I put these at Hikinashi candles as well. I like those. They show price action more. Dude, once you get this cross here, look at that. You can't make this up. You go ahead and go. Now this is I think it's an RSI stochastic mixed together. I was playing around with it, but we'll figure it out. I think you can look at the indicators like this. There we go. So then I'll leave that there for a second. I'll leave it there for about 15 seconds and I'll finish talking. That way you can see. So you can see that, Corey?
Barely. I was gonna ask because you can the way the screen's set up, you got the chart on one side, or maybe it's my screen, then I got everybody else who's on the call. So it's small.
Oh, you know what, bro? Don't worry about that. When you watch the video, what's going to be there?
Okay, cool.
Yeah, so I'm actually showing you what indicators to put up there. So it was like the volume. I had CSA 5-step quarter points, multi-Bollinger Band, heat bands, EMA breakout option,
Gotcha.
fractals, currency strength indicator, CSA 5-step, and stochastic RSI. And it has the inputs in there. What numbers to put. So I mean, it's all right there for you.
All right, good looks.
Yeah, no problem. And so if you guys see how that cross, I mean, shoot, if you put this ruler here, once this thing closed, literally talking about 100 pips here. And that's this is an hour chart. This is really, really, really like consistent right here, because once you see this over broad area here and it crosses, then you see the currency strength change. The market has already made a serious push to the upside, right? Then you get this Fibonacci candle to come down as a seller. And when I told you these Fibonacci candles are based off of price action, and we just talked about the high and low of the day for as a market maker method. I know Corey likes that. That's your high of the day. Once you see that high painted, then you get the pullback. There was kind of a slight stop up, but not a major one. But man, any of these locations here, any of these pullbacks, you get to take a sell. And then if it crossed to 50, man, you good to go. You know, so you're looking anywhere between 120 something pips. You could grab your 40, 50 pips if they're cool for the day. Then move on to the next day. You know, so I'm gonna go ahead. So Corey, anybody else got any more questions? I'm gonna go ahead and hop off of here and get myself ready to maybe look at the market a little bit more. Then go ahead and go to bed.
No, I'm good, man. Appreciate the info tonight.
No problem, y'all. Anybody else? More questions? Okay, cool. We're gonna stop share. We're gonna get back on again on Thursday. Thursday will probably be like a market forecast. I like anybody that traded to just say, hey guys, I took this trade, I lost. Let's kind of look at it and see where you lost and see if we could have did better. Go through the psychology. I want Thursday to be like a psychology mindset. Like, hey, I took this trade and it didn't work out. Why? We'll like to dissect that and figure it out, help you guys out. So again, it's Philly Forex. I'm gonna sign off and you guys have a good night.
All right, thank you.
No problem, Laura.